reduce specific accounts. Okay, if we say contra asset, it just means it reduces the assets. If we say contra revenue, it just reduces the revenue. Contra expense, it just reduces the expense. Okay, so we have contra expenses, which basically reduce the expense charge. Okay, a good example of a contra expense is return outwards, or purchases returns. Okay, this is when goods are returned to the supplier. Okay, so if you bought goods worth 1,500 from your supplier and you find goods worth 300 kwacha bad, you return them to your supplier. So when you return them to the supplier, it means that 1,500 you paid, you have to reduce it by 300 because you return goods worth 300. So your purchase expense reduces to 1,200. Okay. Discounts can be seen also as a contra expense because they reduce also the purchases expense, and they can also be viewed as also a saving or income. Okay. So discount received, this is a discount given to you by your supplier. Okay, so when your supplier gives you a discount, it remains the purchases expense, or the expense you're incurring is reducing. Okay, so discount received is a discount received from the supplier. So you can take it in two ways. You can take it either as a saving, okay, because since you've paid less, it means you have saved an amount of money. So you can take it as income. Or the other way, you can take it as a contra expense. You can say that it reduces your purchases expense. Okay. Yes. Then we have refunds or rebates. Okay. Amounts retained by suppliers after payments which reduce expenses.
What does that mean?
For example, sometimes you can pay a supplier off. Okay, then they return, they return a certain amount back to you. Or if you have been doing business with a supplier, they can give you a rebate where they charge you less.
Okay.
Contra assets reduce the value of assets. Okay, they reduce the value of assets. Okay, so you've got accumulated depreciation. This reduces the value of non-current assets. Okay, when we reach the topic of depreciation, we'll see how that is done. You've got allowance for irrecoverable debts and provision for doubtful debts. This is an estimation of the money you might not get back from the people who are owing you money. Okay, so you have to reduce the trade receivables value. Okay. Accumulated amortization. So depreciation is for tangible non-current assets. Amortization is for intangible non-current assets. Okay. So it reduces the value of accumulated amortization, reduces the value of intangible assets. Okay, then you've also got accumulated depletion, which reduces the value of natural resources like mines or oil fields. Then you've got contra revenue. This reduces the sales revenue. You have return inwards. When your customer returns goods back to you, you made a sale, a customer brings back goods. It means the revenue that you made from that sale has to reduce because the customers brought back those goods. Okay. Even discount allowed. When you give the customer a discount, okay, it means what they are paying you, they are going to pay you less. Okay, you're going to be paid less. That's a discount allowed when you, the business, gives your customer a thing, a discount. So whatever expense you charge the customer, whatever revenue you are supposed to make from the customer, it's coming less the discount. Okay, because discount allowed happens whenever sales are taking place. Right. So the sales revenue will be less because this lower amount has been paid to you. Okay. Then you've also got, sales allowances, okay, which are similar to discounts. Then you've got, for companies, this is contra equity, okay, which it reduces. Equity is just capital for a company, okay. The owner's stake of the company, how much you've put into the company as the owner, basically. Okay, so with drawings is also can fall in this category, but drawings, it's usually done with the smaller businesses, sole traders and partnerships. That's why we call it contra capital. When you, these bigger businesses like a private limited company and a public limited company, there's no drawings. Okay, there is no drawings. In a private limited company, to remove money from the business for personal use, okay, it's going to be very tricky. Okay, even in a public limited company, okay, to remove money for personal use, that will be very tricky. So another contra equity account is treasury shares, where a company just buys back some of its shares, okay, from shareholders. Okay,